Hey guys, good morning. It's Vinod here from GrowWealth. Let's look at the market analysis and the watch list. I'm going to share my screen now. Hope you can see the screen. So this is the S&P 500 index. Let me adjust it so I can see it properly. Last week has been quite interesting because all the index pulled back quite violently, quite a lot on Monday, Tuesday, Wednesday. And S&P 500, as you can see, very nicely found some support at the 50 EMA, and on Thursday and Friday pulled back quite convincingly to just finish just above the 21 and T line. So that is a little bit positive. It's not as bad as it looked on Wednesday, where it just closed below the 50-day EMA, but it came back just above the T line. Whereas if you look at NASDAQ, this one, and as you can see here, this did pull back a reverse and go up on Thursday and Friday, but it could not finish above any of the key moving indicators, moving averages. So this looks really weak. Yes, these 2 days are positive. Some of the really beaten down stocks have recovered slightly, but they are still damaged and broken charts. NASDAQ still looks weaker. I don't think market can do anything. I don't know what's going to happen. But ideally, when these type of actions happen, and despite the strong pullback, it didn't close above the key moving averages. That means it's likely to either go sideways or resume another downtrend. And if that downtrend resumes again, the next likely support would be somewhere around 12,000 region and this low here in March. So it's likely to do that. So be cautious when you're playing with the NASDAQ names. Whereas S&P 500 on this chart and the Dow Jones Index on this chart are much more positive than the NASDAQ. However, a lot of stocks that has the economy reopening stocks have run up a little bit, a bit too much, like oil and gas and retail sectors and things like that. So you'd want to select the right chart, which is just breaking out or consolidating and breaking out rather than very extended stocks. So Dow Jones, as you can see, it did pull back Monday to Wednesday, and then it did not go until the 50-day EMA like S&P or NASDAQ, but it kind of recovered even before then and nicely finished above the T line. The volume is slightly bit low on the recovery days, so that is a bit of an amber sign. If you look at the S&P 500, again, the volume is low on the recovery days compared to the down days. So again, there is a warning sign there. I wouldn't be surprised considering where the S&P 500 has come from January onwards. Year to date, it has gone from 3150 to nearly 4230. So that is quite a lot. 3150, sorry, 3750. So more than 10% in 4 or 5 months. So it's likely that it goes sideways or down for the next few days, I believe. Let's look at the so IWM, that's the Russell 2000 index. So it did recover, but closed below the 50-day moving average. So again, that is weaker. And you can see it's kind of forming the top here like a dome action. So this is still weaker. So the broader market is not fully healthy. S&P 500 Dow Jones, of course, a little bit better than broader market. Let's look at the Bitcoin index. So Bitcoin did pull back quite a lot, close below the 50-day moving average, and on weekly you can see it's still negative MACD, so the trading zone is not there for Bitcoin on a weekly. Ethereum usually did better, but that also pulled down and gave a negative MACD on the daily chart. So it seems like it's likely to kind of take some breather here, but there are a few other cryptos kind of going crazy. So I'm not playing too much on a lot of other cryptos, just trading with some of the main ones only when the trading signal comes up. Let's look at how the watchlist stocks had done from last week onwards. So this is Crocs. So when the market pulled down, so it also came down. And when the market recovered on Thursday, Friday, it recovered and went above and closed above the T-line nicely. If you look at it, many of the market index went up to 50-day moving average. Nasdaq finished even below 50-day, whereas Crocs, it did not even undercut the earnings gap up low here. So it did not even touch the 21 EMA. So that is a strong stock. So it went up after the earnings, pulled back, found some support just below the T line and trying to recover. If you look at the weekly, so that is the weekly pullback, but it's still kind of about this kind of breakout consolidation structure. So this is still positive. The expectation is go sideways or up from here. Next one we had in our watch list was CPE. So it did pull back along with the market, finished on Thursday below the 50 moving average. That's a warning sign. But on Friday, it gapped up and closed within the key moving averages, but not above the T line. It gave a bullish harami on low volume. So it's still on the sideways consolidation phase. Here it seemed it gave a indication that it was going to break out. It did break out, but along with the market weight, it was pulled down. So it's kind of gone back to the consolidation. So along with the strong uptrend it had from November onwards, it needs some time to settle here. And if you're wanting to buy this one, wait until it breaks this top here in order to buy the breakout just after 42.5. Okay. UPS. So this is another strong chart. So it ran up quite a lot after the earnings gap up. And then when the market was weak, it pulled back, but it did not even touch the T line. So this stock is quite strong. It's finding some support at T line or even before the T line and pulled up again. So I still haven't bought this because it's run up a lot and I'm kind of slightly regretting not buying it. But let's see how it works out. If you're an aggressive trader, you could probably buy here with a stop loss around 209. So about $7 stop loss, 3.5% stop loss. It's not bad, but because of the general overall market condition being volatile, I'm generally being defensive in my trading portfolio. We had RVLV, and this was an anticlimax because it had a nice earnings gap up and breaking above this kind of consolidation. And then the very next day, it sold off, nullifying that pattern and sold off even more 2 days later and finished the week below the 50 EMA. So that broke that pattern. So when this breakout fails the very next day, that is a failed breakout. So a stop loss in this case could have been just below the T line or below the breakout candle around 51.60. The next day you would have been stopped out. So you could save yourself with this kind of further downside reversal. So if the breakout didn't sustain and follow through, then that is a fake out or failed breakout. So you kind of get out of that situation. So this stock did not work out in the last week, but watch this. Nucor, the steel company, still acting very well despite market pulling down for 3 days. This only had 1 day on the 12th of May where it kind of had some profit taking, didn't even touch the T line and found some support and recovered and closed at all-time high close on Friday. It is extended, but it has the tailwind behind it, steel industry and infrastructure stocks. I'm not in this, but if you are wanting to buy with this chart on a daily, the stop loss could probably go around 94.5 mark on the weekly. So it is quite a bit extended. If this gives, and it's giving a hammer symbol on the weekly candle, so that is a warning sign. So you'd want to see whether it kind of pulls back. It could do something like this here in end of March and April, where it kind of went sideways and kind of cooled down a little bit before it resumes a trend, or because it has done a long, it has come a long way from February and from November onwards, if you look at it from the vaccine news. But it broke out here, October consolidation broke out in November. And then since then, it's come up quite a long way. So I wouldn't be surprised if there are profit taking happening along with the market kind of weakness right now. be cautious on the stock because it has run up a lot. But if you do want to play, have a tight stop loss, as I mentioned earlier. The next one is a PBFX. So it broke out of this kind of consolidation. It's much more easier on the weekly to look at it. Right? And it's kind of had a profit-taking week last week, but still didn't even come to the T line on the weekly and closed reasonably, closed okay-ish. It's kind of 50% on the range. So it pulled back for 4 days, but then reversed and closed above the T line, which is still positive, and stop loss would be still at the initial level. AMEH was our next stock. So this had run up after this breakout here, good earnings, and then it continued, but it had Thursday and Friday as profit-taking day. So it kind of gave up most of the gains from the previous week. If you look at the weekly candle, so it tries to go up and then reverse and gives a piercing signal. Piercing signal can mean that it can go sideways or come downwards. So I wouldn't be surprised if that happens in the stock going forward. So that is the consolidation pattern that it broke out here. Because of the piercing pattern, this is not on the top of my watch list anymore. So this is how it was last week. But considering the overall market, it's not too bad because it's still above the 50-day, but below the T line and 21-day moving average. Going forward for next week, the stocks for our watch list, I'm continuing with Crocs. As you can see here, it pulled back, but very strong. Didn't even come to the 21 EMA and closed well above the T line on the daily. So it kind of maintains that earnings gap up low, and it hasn't broken down and undercut that. So that is quite a strong indication. So we can keep this on our watch list still. I am introducing some of the beaten down stocks with great earnings, and that's likely to have some bounce going forward in the next few days and weeks. This is also a great opportunity to buy some of the long-term investments, gradually accumulating that. If you haven't started any positions, start a fifth of it or a third of the position based on your position sizing, and then gradually accumulate depending on where the market settles down. So one such stock is Snowflake. So it was one of the very hot IPO stocks. Okay. So when it came up on IPO, I think the IPO price was about 130 or something, but then it opened at 245. And soon after, as you can see in this chart, it ran up to 429. And then it had a reversal. It undercut the IPO base here and went low with the selling spree that happened with the growth stock. And then on Friday, it had a higher volume reversal closed above the T line. It's still below the 50-day moving average, so that is going to be quite a significant level if you're looking for long-term investment. But because of the high volume pullback reversal, I've added this to my stock watch list. I am watching this quite closely for long-term hold as well. I might start a position if possible in the next few days for my long-term product, depending on where it opens on Monday. I'm also keeping UPS in our watch list from last week because of the strong price action it showed. Despite the market pullback, it only came down to the T line, and then it's still very close to all-time high. So I'm maintaining UPS in the watch list. The next one is Yeti. It had nice earnings on the 13th, and that also coincided with the market reversal on Thursday and Friday. As you can see, it pulled back to the 50-day moving average. It did undercut that 50-day moving average on Thursday, but then it had a B to G, as they say. R to G, so it's red to green. We have pink and blue, but usually red and green candles. So it had a red candle, and then in the middle of the day, it reversed into a blue candle, and that momentum continued with reasonable volume and closed well above the T line and close to all-time high on Yeti. So this is really strong chart. So if you can look at this, So one could say this is a hammer symbol, which it is on higher volume. The market is slightly bit weaker. That is something you may want to watch if you were playing for longer term, depending on the time scale. But on the daily, with high volume earnings reaction, shakeout of weak hands around the 50-day moving average and push back and reversal around the T line, that is positive. So, if you, so that's a good one to have a short-term trading position if you're looking for it. And the stop loss, of course, will be below the 50-day moving average. The next one is a relatively newer IPO, but then it sold off along with the other technical companies. So this is Bumble, a dating app primarily aimed at women. So it kind of opened the IPO day at 76, but then closed at 70. And it had really bad stretch since then. And if you look at it, it went all the way down to 38. So nearly 50% down from the IPO initial trading day. And then had a bullish harami candle on Friday. Earnings not bad at all. So considering it had pulled back from IPO price by 50% already and had a bullish harami, the T line acts as a magnet or a stretched elastic band. So it kind of pulls back towards that. It's very likely that the price could pull back. The immediate target will be around $50. And depending on how the overall market is, it could go even further. So there's a good opportunity for 10 to 15% profit, maybe longer, because this is a reasonably good company if you want to start a long-term position in this as well. Next one on watch list is VSTO, Vista Outdoors. So this is economy reopening play with the outdoors activities coming up. Go to weekly, which will be a really nice chart to look at. So that is the previous high. I think it might be the all-time high. Yes, that is the all-time high, the orange line. It has a 4-5 year base, 4.5 years base. It's still within that base. It's on the right side of the base. So that's the left side. This is the bottom. This is the right side of the base. So on the right side of the base, you can look for volume clues and then breakout patterns after consolidation. So right here between August and December, there's a consolidation phase. And then it broke out on the week of 21st December. It ran up until mid-February. And then in the last couple of months, it's kind of consolidated to the T line on the weekly. And now it's kind of resuming the uptrend on reasonable volume. Okay, so this is really positive with the economy reopening, particularly in the US, with the vaccine news and things like that. If it breaks above this high here, which is at 33.65, that is a breakout pattern, and you could buy. The immediate target will be the orange line at 54. And if it recovers, a lot of people go outdoors and do camping and things like that. This company could do really well, even beyond that. So you have good 40% here. 40% is from 37 to 54. Yeah, 40-50% there, easily possible upon breakout. Stop loss could be somewhere below the T line on the weekly. The next one is Upstart. So you might remember that we had this in our watch list some time ago. Let's go to the daily first. Okay, let me check these. Let me just give me 1 second. Let me hide them. Right. So Upstart had an earnings gap up, right there in March, and then ran up really well. I bought it somewhere here and then topped up here, but then it pulled back. It pulled back to 50. It undercut that. It had another earnings season, which is also positive, but the market wasn't ready for it. So it opened up, gapped up quite a lot after the second earnings, but then it pulled back all the way down and closed that gap. And I think it also undercut the previous low here. The low here was 80.85, and the low of initial gap up was 81.96. So it undercut that low. But then on Friday, it had a strong candle closed above the 21.50 and T line. The price action shows that it probably will take a little bit longer to go sideways and then breaks out of this kind of descending trend line. But this is encouraging action that it kind of finds some support around this level of 81. Let me unhide the other lines that I had to show you additional indication. So this stock that came public here on week of 16th of December, and this brown line is the AVWAP, average volume weighted price. So those who bought and held from the IPO onwards, the average price would be around 88.49, and when the price pulled back, it found some support there. So AVWAP is a strong, is a really useful indicator sometimes to see where the potential support and resistance levels are. There's the intermediate high here, and then there is this earnings gap up here. And when I added AVWAP from those 2 points, there is a bit of a resistance line here between 105 and 109. And that certainly seemed to have acted as resistance with the recent earnings gap up here. So it's kind of, the price is stuck between these two AVWAP levels, between 105 to 9 and 88. The fact that it found some support here is encouraging, and you could start to nibble here with the stop loss below 80. Probably I would suggest think about it for medium to long-term hold. I do have the stock. It is sitting in a bit of a loss because I bought it here for a long term, and I might, depending on my cash position, I might start to add a little bit around this level here. If it breaks above this AVWAP resistance, that is additional confirmation. And also there's this descending trend line here, somewhere here. So if the price goes above 118, 120 mark, and that will be another confirmation of resumption of uptrend. So these are the stocks I have for the next week's watch list. To go through the names again, on the chart: UPST, VSTO, Bumble, Yeti, UPS, Snowflake, and the last one is Cox. Hope it is helpful. There is a bifurcating market. Nasdaq still below 50 EMA. S&P, Dow Jones not too bad, but many of these stocks are quite extended, and they are working on consolidating, or some of them are profit taking as well. So identify stocks like what I've shared with you in the watch list, that is nicely setting up and showing some resilience and not pulling back as much as the market, because that shows relative strength of these stocks. And so hope that was helpful. Go through them on Sunday. I'm releasing this earlier on, so you have the opportunity to go through them. Happy learning, successful investing. I see you in your next video. Bye-bye.